So Sean, kind of what are these some of these implications, and what do these owners need to be evaluating as they're thinking about the transaction, whether ESOP or otherwise?
I think that's a great point, Greg. I think one of the first things, and it's actually on the bottom of this list, is you need to evaluate your readiness before you even go to market or before you even are considering sort of an ownership transition path. And a lot of that is going to come down to preparation and timing. And so if you understand sort of the differences in your kind of alternatives, some business owners go down an M&A path, others want to pursue an ESOP. You might have a recap opportunity there, but just kind of understanding what those different paths entail and what those specific, particularly in the M&A and ESOP side, what those specific buyers are looking for and what their concerns are going to be critical. And so some of this is going to come down to cycle timing, right? So where are you in your business cycle? Anthony alluded, if you're all of a sudden seeing softness in the business right now, maybe it's not a good time to market the business. Maybe you need to get a sense of what's going on internally and sort of develop a strategy to kind of turn things around or get back to at least sort of normal operating conditions. Conversely, if things are looking improved and growth is there and growth seems sustainable and supportable, now is probably a good time to kind of look at a potential transaction. And so some of that also then goes into understanding the valuation of the business. Do you understand your own value drivers? What do buyers value in a transaction? And so all of this comes down to a lot of what we would call company positioning. And, and some of these are listed in the bullets above. And so particularly with this environment, margin resilience under stress, can you demonstrate stability, or have you demonstrated stability under stress? And so if you're able to prove those things out, leverage capacity improves, valuation support strengthens. And so buyers are going to be asking, how does EBITDA perform under stress? What happened over the past 3 to 5 years? How did you, either prove out and maintain profitability? And they're going to want to hear the story of the strategy that got you through a lot of those things. You're going to have to definitely quantify your competitive advantages, particularly in a tariff environment if you have exposure. So maybe you have sourcing that's domestic and you don't have an exposure to tariffs. That's a very big positive to the buyer market. Are you concentrated with your supplier base? Again, we talked about a lot of contractual protections and how defensible are pass-through and pricing power for your business. And so if you can support all of those things and you're able to kind of navigate that environment without minimal impact to your operations, it's going to result in a stronger valuation outcome.
Yeah, and Sean, I would just jump in there and say, if you could check the box on all of these kind of items that you have here, it's a great time to be selling your business. I mean, you're going to get a tremendous amount of views or eyes on your company. And it likely, again, as long as you could check all the boxes here, you're going to have very, very strong valuation outcomes.
No, I agree, and that speaks both for the M&A side and the ESOP side as well, because even on the trustees, when they're evaluating transactions, they're going to be looking for all these check boxes as well. And so again, a lot of this really focuses on documentation and supporting your ability to mitigate any of these risks. To the extent that you can do that, you're going to have a far superior outcome to companies that can't do it.